Good evening, and welcome to this regular meeting of the Helotes City Council. It's March 28th, 2019. We're underway at 7 p.m. And if you have a cell phone or other electronic communication device, please turn it to off, silent, or vibrate. We'd certainly appreciate it. You're doing the invocation?
Yes, sir.
Yeah. And we'll start off our agenda tonight with the invocation. Tonight, Councilmember Fredericks will be doing that, and then we'll have the pledge to the American and Texas flag. So if you would please stand for the invocation and pledges.
Heavenly Father, we come to you today asking for your guidance, wisdom, and support as we begin this meeting. Help us to engage in meaningful discussion, grant us a spirit of service, and nurture the bonds of community. Fill us with your grace as we make decisions that affect our citizens we serve, and continue to remind us that we are here, that we do here today, all that we accomplish is for the pursuit of the truth of the greater glory of you and for the service of humanity. We ask these things in your name. Amen.
Amen.
Amen. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Honor the Texas flag. I pledge allegiance to thee, Texas, one state, under God, one and indivisible. Okay, next up is open session. Selena, I didn't see anybody sign up, but am I right?
No,
okay.
Mayor, we did
Nobody
not.
signed up to speak, so we'll move on in the agenda to the consent portion. Tonight, our consent agenda, items 3 through 5. And in this type of meeting, a consent agenda are made up of multiple of items, typically seen as fairly routine city business by me and the city staff. What we're looking for is a single motion and a second to approve all of the agenda items with one motion. However, council can ask questions or ask to have an item removed from the consent and placed into the individual portion of the agenda. So I'd ask council now, are there any questions on any of the items 3 through 5 or a request to pull any? None? None being heard, we'll call the question, we'll look for a motion to approve items 3 through 5.
I make a motion we approve consent agenda items 3 through 5.
We have a motion from Byes. Do we have a second?
I'll second it.
Second from Blue. So with a motion from Byes, a second from Blue, and no questions or request to pull, we'll call the question. All in favor say aye.
Aye.
Opposed say no. Consent agenda is approved unanimously. Okay, next up we have a special treat. This is always a highlight of, one of the highlights of our fiscal year, and that's our audit from the previous year. And tonight, Kim Roach is here from Armstrong, Vaughn and Associates, PC, and she's going to tell us all about our audit, and then we'll open up for questions. So Kim, thank you for being here, and it's yours.
My pleasure. Well, council and everyone, thank you for having me this evening. I wish I could tell you everything there is to tell you about this audit, but there is a lot of information, so I'm going to try to not keep your evening too terribly long. I do want to say thank you, of course, to management and staff. Everyone always works very, very diligently and very hard to make sure that we get all the information that we need in order to conduct our audit, and it's a wonderful opportunity to get to work with your city.
Kim, could you pull the mic down just a little bit? There you go.
That
Thank
better?
you. Yeah.
Okay. You always make me nervous with the microphones. Of course, there's certainly some required communications that we always want to go over and discuss with you. One of the items being, of course, that we did issue what's called an unmodified opinion. That's the best that we can give. It's what we typically give for the city's financial statements. And what that means is that the financials as prepared by management were materially correct. We did have some routine type audit adjustments as we typically do, but only one adjustment really that rose to the level of being considered significant, and really only because it was in a smaller fund that just had simply a different threshold of what has to be considered significant. We also had a new accounting standard that had to be implemented for your city this year, and it was actually across the board for all municipalities. And it's an exact sister standard to the pension retirement standard that came out a few years ago. Now, instead of only having a liability for your unfunded pension and retirement, you now have an unfunded liability for any other post-employment benefit. And there is one additional benefit that would fall under this standard for the city, and that's related still through TMRS, the Texas Municipal Retirement System, but it relates to your sudden death benefits for your city employees. I also wanted to be sure to mention to you, of course, that the city complied with all aspects of the Public Funds Investment Act, and we had actually no recommendations this year for improvement to internal controls. We actually had one recommendation in the prior year, and we even followed up on it this year and saw where our suggestion was taken by management, of course, and implemented, and we were able to say that that had been addressed. Well, one thing that I am very excited to mention tonight is that there was another big change that happened to your report this year, to the audit report. Previously, you've received an annual financial report, which is certainly a legal and accepting type of presentation. But this year, at the election of management, actually at the election of Rick, he called and said that this year he really wanted to step up the game, and so now it is a comprehensive annual financial report, often referred to as a CAFR. And so a CAFR has much more to it, much more information goes into it, as well as our testing and what we're required to do. In addition, once a CAFR has been completed, it can actually be submitted to the Government Finance Officers Association for a certificate in excellence for financial reporting. And it's my understanding that the city intends to submit this to see if they receive the certificate. So very, very exciting news to be able to report that. So if it looks thicker, it is. There's a lot more information in it this year. So I do want to just kind of mention a couple of those things. The biggest additions to the report actually fall at the beginning, the middle, and the end. So got to cover it that way. There's a new letter at the very beginning. This is actually just before your financial section. It begins on Roman numeral page, little Roman numeral 5, or letter V. So this letter would actually be from the city to any readers of the financial statements, i.e. citizens, bondholders, anybody like that would just enjoy reading the city's audit report. So, and this letter was actually written by management. I'm sure there's a lot of people out there wanting to read the city audit. So that's one addition, and this letter basically is an opportunity to really get to talk about your city and what makes you unique and special, as well as just certain requirements that have to go into this letter. There's also some additional statistical tables that fall into the report, and that's kind of what I was referring to as sort of the middle. I guess it's the end of the middle, but some additional tables that just go into a little bit more, again, about the city and sort of the operating indicators and just information historically that's entertaining to readers. And the really hard part was that Rick and Tabby had to work together to go back to present 10 years worth of information, and they managed to get it done and get those numbers to us, and so those numbers are now included in the report as well. Now, those numbers are not audited, they're just informational, but they are interesting. So if you see some really tiny numbers at the back of the report, that's what those are, and only tiny because of the sheer volume of what all they presented to us. Finally, the last big addition that came into the report this year actually falls on, let's see, I didn't actually look up a page number, but page 108. Did I mention the report was longer? We now get up to page 108. And this is another new letter. This letter is actually from us. We're giving a report. We're now required to report on the city's internal controls over financial reporting. So just to clarify, in the past, we've always gained an understanding of the city's internal controls over financial reporting, as well as just operationally, but we never have had to give an opinion on those internal controls. We're still not giving an opinion as to whether or not those controls are operating effectively, but we are much more required now to put it in the body of your audit report if we identify any kind of deficiency or material weakness within your city's internal controls. So it kind of brings to light a little bit more anybody who might have had an issue. Obviously, for you all, I've already indicated that we've had no recommendations, so we had no deficiencies that we noted here. Any questions on any of the new stuff? Okay, well then, just to actually touch on some numbers, because I couldn't leave here without talking about some numbers. So if you will turn to page 14 and 15, sorry. These two particular pages are the entire city at a glance, and it's the entire city as if you operated like a business. Therefore, it's no longer under the modified accrual approach that you typically would budget and operate under. This now includes all of your long-term assets, all your long-term liabilities, including that new liability I was just mentioning for the unfunded other post-employment benefits, as well as your retirement and all your long-term payouts of your bonds or any other type of liabilities you would have. So you can see there on page 14, about 2/3 of the way down the page, you had total assets. Again, this is the entire city, so all of your funds totaled at just over $14.6 million. The majority of this, of course, about $9 million of it, is included in your buildings, your equipment, your infrastructure, less depreciation. So certainly the majority of your assets, of course, would still be within the city's infrastructure and everything. Looking over on page 15, you'll see your liabilities split up between current liabilities and non-current liabilities. The current, ideally, are going to be paid here in FY19. Obviously, the non-current going to be paid long-term after that, beginning in FY20. So your total liabilities, and again, remember that includes all your long-term debt, all your bonds, the settlement payable, the net pension liability, as well as that OPEB, that other post-employment liability. So your total liabilities came to just over $12 million. I did want to point out that the net pension liability there of $381,000, about halfway down the page, that actually was a decrease from the previous year of about $740,000, significant decline in what that estimated liability was. Now, while I wish I could tell you that it was just because the city was paying all this extra money in to reduce your liability, all it really related to was the city did continue to make their required contributions as stated by the rate that's set by TMRS, but really the main impact as to why that declined almost by 50% was that because when they do all of their actuarial assumptions and the things that they're using to estimate what those future liabilities are going to be, one main number changed this year. They had underestimated what they thought the investment rate of return was going to be. And so fortunately, all the previous payments that the city's made in, that's holding in your fiduciary plan, actually earned a higher rate of return than what they had estimated. So it actually reduced your future liability. So after all that, you can see that you had a net position for the city of a total of $2.6 million. Now, certainly part of that is going to be within the city's infrastructure that has not been depreciated out yet, less the future bond payments on those items that were, those projects that were funded through bonds, through certificates of obligation in your case. But the reason why you have a deficit in your unrestricted net position is because certainly the 2015 bonds, the certificates that you issued were primarily for a large project, of course, primarily for the Highway 16 water and sewer improvements that will not be the city's assets. Therefore, it's almost like you have this debt that you're paying down gradually through the bond payout schedule that's all related to non-city infrastructure. Certainly going to be very vital to the citizens and helpful to your city, but it is essentially debt that's being paid down out of your unrestricted funds, essentially. So as those bonds get paid down, then that unrestricted net position will gradually come back closer to zero. Any questions on any of that? All right. Well, turning over to page 17. It actually goes on to page 18 as well, but I know Selena's working at one page at a time on the screen there for make it legible numbers. This is now all of your funds separated individually, except for your smaller special revenue funds are still combined into one single column called the total non-major funds. But your Economic Development Corporation, your debt service, your capital projects, and always your general fund, first and foremost, will be reported separately here. This is now under, one more page now. This is now going to be under the modified accrual that you're used to operating under based on your budget and the financial statements that are prepared internally. So you can see there that your general fund in particular had 2.6 million worth of total assets. The majority of this, of course, was already in your liquid cash and investments. The other largest portion is actually related to your sales tax receivable that was collected within 60 days after year end. So that's the other largest item under your total assets. After your liabilities, you actually had a total fund balance in the general fund of 1.9 million, and that actually represents about 3.7 months worth of your average operating expenditures. I know in the past we always used to say about 3 to 6 months. I did do a kind of a current lookup, and the current recommendation now simply says no less than 2 months. So 3.7 months, you're definitely well within the acceptable or the recommended range there from the GFOA. Any questions on that? Well, the last bit I wanted to take you to, apologize for all the page flipping. If you'll go to page 48. This is now your revenues and expenditures for the general fund. Your current year numbers are the bolded numbers right there down the center of the page. You can see your original and final budget just to the left of those bolded numbers. You can see whether you had a favorable or unfavorable variance just to the right, and a nice comparison to 2017 to the far right there. So you can see that your total revenues did fall short a little bit of your actual final budget by about $239,000. The majority of that did fall within your original budget, or your original and your final budgets related to taxes, both ad valorem tax and sales tax. And part of the reason for that is certainly because through some of your sales tax agreements, the 380 agreements with developers, some of that sales tax is being paid back to the developers. So it makes it very difficult to be able to budget those figures. You can see there your largest decline from 2017 actually was under your miscellaneous revenue, and that's where we report your dispatch revenue, and due to a contract that lapsed from 17 going into 18, that was the majority reason for your decline in revenues from one year to the next. Overall, looking on page, actually I'm looking on page 50 now, your total expenditures were actually under your final budget by about $46,000. It's about halfway down on page 50. Individually, you did have a couple of departments that went over, but the primary reason for any budget overages were due to unforeseen repairs that were needed. And so really overall, your total expenditures still remained under that final budget, giving you a positive variance. After some additional items below, which included some capital lease proceeds for some new vehicles that were leased, as well as some insurance proceeds, and some transfers into the general fund to help cover some of these expenditures, you can see the overall change in your current year general fund balance was a decline of $59,000, but very much close to breaking even, and certainly, again, even after that small decline for this year, you still had that 3.7 months available. I've done a lot of talking. I'm ready for any questions you may have this evening.
Thanks, Kim. I think they're spellbound.
There's a lot to tell.
Cynthia, would you like to start? Do you have any questions?
I have no questions. I don't.
Okay. Paul?
I do not.
Bert?
Yes, Kim, on page 46, you say, or the audit says that we didn't make any payments on our fire truck or our ambulance in fiscal year 2018. I thought we had made some payments on those vehicles prior to the end of the year.
You did actually make payments on it. I apologize. What that's trying to indicate is that because the way the lease agreement was written up, it was essentially, you didn't actually take possession of the vehicle or of the items until FY19, so they're not reported in this financial statement other than those payments that were made just before September 30 as part of that kind of going
It'll be in
forward.
19.
Yes, sir. They were actually recorded on the balance sheet as a prepaid type of item.
And then I had one other question for you.
Yes, sir.
On page 87, the total primary government expenses, I've noticed that since 2009, it looks like to me our government expenses have doubled for the city of Helotes. Do you see that with other cities our size? Is that pretty much the trend? Because
That's a great question. Certainly, we look from one year to the next, and there's never been a particular year that has jumped out. I do believe one of the main reasons why that fluctuation, in particular for your city, is back in 2009. The governmental expenditures would not have included the expenses related to dispatch and EMS. Those had previously been reported under that proprietary, and we're almost done with all of that, not comparing apples to
Gotcha.
apples, but
Okay,
with 10
it should
years.
start slowing down a little.
Yes, sir.
Yeah,
Yes, I believe
okay.
that was 2014 is when that,
That just kind of jumped out at me, and I'm going, wow, so.
Not to mention that those would include the 2007 C of O expenditures and the 2015 C of O expenditures. So that's 6 million plus 4 million, so that's $10 million of that, because we've almost exhausted all of the C of O monies that we have currently.
Okay,
So that's why they keep going up.
that's all I had. Good job, by the way.
thank you.
Alex?
Great, thank you. I was thinking that part of it would be since 2009 to today, the city has, added to 50% of the population, and everything else goes along with it, too. So it's not that it's been a stagnant growth pattern. I had one question, it's probably on page 530. No, I'm just kidding. You had mentioned in your earlier discussion, I think you were on page 17, 18, 19, somewhere 15, 16, in that area, about the expenditure associated with the water and the sewer, and how we would be paying that down, and then it would, because the infrastructure is not necessarily ours. My question really was more a matter of curiosity rather than the report. My understanding was that when customers hook up to the SAWS facilities, SAWS will be collecting a certain amount of fees associated with the size of the property, and that over a certain period of time will be returned back to the city. Will that be just put general budget, or will that actually go towards some of this debt, or where will that go in this, is what my question was.
I would think that would go into your general fund revenues at that point.
It actually wouldn't. We would be required by bond council to use that money to pay down the 2015 C of Os.
Because I know that there was some large sums there, especially if some larger properties hooked up into the city water, there's going to be some money generated there. And I was just curious, so it really doesn't have anything to do with the entries that you mentioned about the C of Os and all that, but it will go towards the COO, in addition to the regular payments that we have to make on those?
Yes, sir.
So it'll be just sort of like comes in and goes out and
Right.
make us pay it off a little faster. That was my question. I was just curious where that fit in. Thank you.
Sure.
And I do plan to read it.
You what?
Plan to read this.
I just had a couple too, Kim.
Sir.
If you said it, I missed it, but in your findings, you found no deficiencies again
That's correct.
at all. And I know that you complimented the staff, especially Rick and Tabby, and I didn't think to introduce Tabby here to everybody, but this is Tabitha Durr. She's our city treasurer and was a big part in putting all this together. So I'd like to compliment both Tabby and Rick for the fine job they did, and wish us luck for getting that certificate. I understand it's a big deal.
Yes, sir.
Last question. In the 3.7 months of basic reserve or emergency money, compared to other cities our size, and I ask you this basically every year, in your experience, is the 3.7 a comfortable number? Since they're now saying not less than 2?
Not less than 2. Yes, sir. I mean, I feel like, it is so hard to try to compare from one city to another because every city is going to have different issues, of course, that they're dealing with, different population sizes, and growth, is going to vary from one city to another. So I certainly think that that's where it makes it very hard from my perspective to be able to compare. I'm happy to report that I don't think we have any cities that fall below that GFOA recommended minimum, if you will. So certainly, I think 3.7 from my perspective, I think that's a healthy place to be.
Okay, great. I appreciate it. And again, thanks for coming tonight.
My pleasure.
We have an action portion of this agenda item, and that's to accept the budget. And so at this time, I would ask for a motion and a second to discuss, if necessary, and take action on approving the audit, to approve the audit, which is 2018 audit.
Mayor, I make a motion, we discuss, take action on the audit just presented.
We have a motion from Byes. Do we have a second?
Second.
Second from Fredericks. So Bert, any follow-up, last-minute questions? Paul?
No, sir.
Cynthia? Nothing? Alex? We good? Okay, well, no questions or discussion being requested. We'll call the question. All in favor of approving the 2018 budget, say aye.
Aye.
Opposed, say no. Motion carries unanimously. Kim, thanks again.
Thank you.
Tabby, if you want to stay, you're welcome, but if not, now's the time.
She's getting out of here.
Could be exciting.
My chair's going down.
It is, that's the bad one. Yep.
Okay, item number 7 is discussion of an action on the EDC fiscal year ending 2019 strategic work plan. So if we can have a motion and a second to open this for discussion and then possible action.
Mr. Mayor, make a motion, we discuss, take action on number 7.
We have a motion from Byes. Do we have a second?
I'll second.
Second from Fredericks. Okay, Bert, you're up. It's your motion, and we have Pat Wooten and Glenn here from the EDC. So if we need to get some questions answered, I'm sure they'll be willing to step up to the podium. But as of right now, let's just go ahead and see where discussion goes and take it from there.
Well, I was at the EDC meeting, and I've already heard everything about this, and I think it's a good goals. I think they have their goals where they should be. They're working as hard as they can to get these things done. They're a little bit handcuffed about, because it's tough to get businesses in the ETJ to come aboard and things like that. And then the MDD, they want to back us up to do that also. But the MDD is going to be difficult to do because we're having, VIA is not going to allow us right now to have them relinquish their tax money. But other than that, I think they've done a really good job on their goals for the upcoming year.
Okay, that it?
Yes, sir.
Paul?
I guess, is this just part of the presentation that y'all gave a little bit ago?
Yeah.
This is just the update?
Well, no, this is a revision to the plan. What happens is quarterly, they will provide an update on their progress on the plan.
Okay. So this is just an extension of what you presented, updated, is what I was kind of seeing.
Yes.
Okay. No, that's all. Thank you.
Cynthia?
I don't have anything to say.
Alex?
I don't have any comments as well, other than I think it's a good plan.
Okay, I have a few comments and questions. I'm curious, on most of these pages, you're showing the plan being a 2018, 2019 plan. This is the 2019 work plan. Why are you on almost every page, including this 2018, when this is 2019? When do you want to come up to the,
I can address that. It's the fiscal year, 2018, 2019.
pardon me,
It's the fiscal year,
fiscal year?
yes.
Okay. It doesn't really make that clear. Goal 1, the priority one, I talked to Rick about this some time ago, and you're talking about incentives, offering incentives as early as the pre-development meeting. And I've always said you don't want to come out of the gate giving everything away. And so I think at a pre-development meeting, that's a little premature to start offering incentives. To me, you start offering incentives when the business or developer start asking for them, or it looks like the deal might go away without them. You might toss some out there, but you certainly don't want to expose your willingness to give everything away as early as the pre-development meeting. So I'm not in agreement with your goal 1, priority 1, as far as giving tax abatements, 380 agreements, impact fee credits and pro rata refunds, and reducing or eliminating permit and licensing fees, and then do the tax increment reinvestment zones, at least not at pre-development. So I'm concerned about that.
The purpose in that, Mayor, is
Go
just to...
go ahead if you would and identify yourself.
Oh, Pat Wooten, President of EDC, is just to, if the developers seem to have something worthwhile, just to let them know that those are out there and open for discussion. And in fact, nearly all of those would be discussions with the city staff rather than the EDC. Just to let the developers know that there are incentives out there that could be available, but they have to be negotiated.
Yeah, we generally let them know that at some point along the way. It's just, at the pre-development meeting, we usually don't start talking about that right out of the gate. That's my concern. In other words, we want to see where they're at and what they're trying to do and how serious they are before we start adding
Well,
incentives to it.
they would not be, that would not be brought up until we know where they're at and what they want to do, what they're looking at. They're not gonna walk in the door and get a list of all these things that are available before Glenn and Rick have the opportunity to talk with them, and they'll present whatever they think's appropriate at the time.
Yeah,
It's just that we can use that if necessary, if we've got a good developer coming in. It's not something we're gonna throw out in front of everybody.
yeah. Well, if Glenn and Rick are making the first contact, it would be good for them not to commit the city to any incentives before we
Well,
at least know what's going
The
on.
city can't commit them to anything until y'all take action on it. It's just
I
be
got
for
it.
discussion.
I got it. All I'm saying is, it shouldn't be given away that early.
Okay.
And then on goal 3, and just watching the video of your last meeting, you were supposed to add the commercial corridor between Hausman and 1604 to the projects, and I notice that's not on here.
Oh, if you're looking at the same one I am, that had not been added yet. Rick was gonna add that to the
No,
final.
it is,
Yeah, that was supposed to be added before it came to council.
that was added.
I didn't see it anywhere.
Yeah, that's the second bullet point. Promote development along the State Highway 16 commercial corridor. Page 6.
It's under goal 3, page 6, the second bullet, under priority 2.
Priority 2 under projects?
Yes, second bullet.
Oh, okay. I missed that. Appreciate it. The only other concern I had, and this is just from watching the meeting, I know on the February meeting, you had 5 of your voting members there, and a couple of them had some pretty good questions, and we're supposed to come back and get answers to those. This time, this March meeting, you only had 3 voting members there out of your 6. And there wasn't a whole lot of discussion on it.
We'd already had 2 work sessions on it. This was
Well,
the third review.
Yeah. But the main issue I have on this is watching your video. You didn't actually take action and approve the plan. You had a motion and a second, but you didn't take action, and then you had a motion and a second to transmit to council, and then you did take a vote on that. So in my mind, you didn't actually approve the plan. So what I'd like to recommend to council is, there's no hurry on doing this, is to either postpone this indefinitely or postpone it for a month and let this go back to the EDC board for everybody to be able to talk about a little more and actually take action on. Because like I said, they took action to transmit it to us, but they haven't really approved the plan yet.
Do you remember that, Rick? Thought we voted to
This is
approve
the first I've heard of it, so I don't know.
Yeah, no, I just watched it before I came over here, and I noticed that you didn't take action. You took a motion and a second to discuss, but you didn't take action to approve it, and then you took action to transmit it. These are just my
it. We
comments.
took action to approve it and transmit it to
didn't
council,
take
is
a
what we
vote.
did.
Anyway, Bert, did you have any comments? No. Again, it's up to y'all. You can accept it like it is, without the EDC having approved it as a board action, or we can send it back to them for another month. Paul, any comments?
No. I'm okay with postponing it if we want to postpone it.
Okay, Cynthia, anything?
I want to thank you for bringing up this priority 1 situation with the incentives. I think you're absolutely right to just, first of all, does the EDC, is the is the money for these Chapter 380 agreements and all these abatement programs coming from the EDC's coffers or the city's?
Part of it, if they join in the agreement, most of it comes from the city. But the EDC generally shadows what the city does. At least they have
And-
historically.
And also, isn't this usually geared towards big businesses, like big corporations, not just like a mom and pop would come in and want all of this stuff, right?
Yeah, although we did do it for Ken Dempsey in Old Town. We did a little 380 for him. And so we have done that one, and I think we did one for Tom Rhodey on Business Parkway.
Neither
But,
one of those are mom and pop developments.
So I think you should.
You can go, Pat, you can go ahead and sit back down if you would, please.
I think it would be very beneficial to just, on the priority one, to leave off all of that. I mean, yes, we all know that those are there and available, but hopefully somebody can come in with enough that they just want to come in and we don't have to give them all of this.
Right, that's the thing.
But to have it written right here like this, it's like the first thing you tell them, we want you, this is what we can give you, instead of letting them come and say, we want to be there. Maybe we would like some of these, but let them be the ones to instigate it. I would definitely look at that, and I'd like to, again, thank the mayor for bringing that up, because that is counterproductive to do it this way for the city.
Can I add something?
Sure.
Staff has never initially said that we would give away any incentives. It's typically after they present their financial woes that we believe it's a viable option, that we would start talking about that.
Yeah, we understand that. Alex, anything?
Yeah, I think there's sort of a little miscommunication on that. I agree that with the president and our administrator, that they're not going to go there. But if they're not going to go there to begin with, it shouldn't be priority one, goal one. I mean, that's the first thing that you say. The first priority of the entire EDC is to communicate this.
Right.
No, the first priority is to do all the other stuff, and then later on, bring these up. But I don't think anybody believes that the EDC or its representatives are going to go out there and broadcast this first. It just seems to be in the wrong place on the report, that's all. I would agree with that
Well,
statement.
if it's in their work plan, though, it's
Yeah,
public information.
Yeah, I agree.
Yeah, the other thing is, if the mayor doesn't think that the action was actually taken by EDC, and I don't know, I didn't watch the meeting and I wasn't present at the meeting, so if there's a question that they actually approved it, then I don't know that it would be appropriate for us to approve something until we're sure
Yeah,
about
I
that.
watched it 3 times.
So, okay. That's all.
Bert, anything else?
Well, what you mentioned about the meeting, that one went right by me, but the reason I would postpone this is because now I'm totally confused on what you brought up. I need to watch the meeting again. I mean, to me, they're sending it to council for approval. Without us approving it, it's not going to get done anyway. So I don't understand exactly what you are trying to say here. You're saying that they did not do the procedure correctly?
Correct. They didn't take a vote and approve the deal. They took a vote to transmit it to council.
Okay, and pushing it back a month would not hurt anything.
No?
So I would be, since I made the motion, I would be okay with postponing it. I guess we'd have to call it indefinitely.
That wouldn't hurt?
Yeah.
Yeah. Just, you want to amend your motion then
Yes.
to postpone it indefinitely?
Yeah, and then I'd also like to say about I disagree with the priorities. I don't think that our staff is, I don't know how to put it, but I don't think they're going to go out there and say right away, like Alex was saying, that they're going to try to just give this stuff away. What they're trying to do is incentivize these people to come into our city. And I think we're kind of, how do you say it? I think we're kind of micromanaging that part of that goal. It's not something that they're going to go out and just hand over like that, in my mind. So, anyway, but that's my opinion, and I guess I can amend my motion to postpone it indefinitely.
Paul, you second that? Second. Cynthia, any follow-up?
No.
Alex, any follow-up? No, sir. Okay, then the motion has been amended to postpone indefinitely. No further questions or discussion being required. All in favor of postponing indefinitely, say aye.
Aye.
Opposed, say no. Motion carries. We'll send this back to the EDC with some notes, and I appreciate it. And that is the last item on our agenda, so if there's no objections, we'll adjourn. No objections? Sir. We're adjourned at 7:40.